in our SLCM subject, we have the concept of SEBI Buyback of Securities Regulations 2018. So now the Companies Act, when we look at listed companies, we always have Securities and Exchange Board of India, and that is the whole subject which we are studying. But before we go into the SEBI regulations of 2018, we need to understand what is buyback and what is buying. Okay, buy versus buyback. So this is SEBI Buyback of Securities Regulations 2018. And every time I have told many times to you, Section 2 subsection H of the Securities Contract Regulation Act talks about the definition of what is a security. Correct? Whether it is shares, whether it is bonds, whether it is debentures, whatever it is. Now this whole style which I am adopting for this subject and most of the other subjects at Excel Academy is where we talk one-to-one. I know we are not meeting in person, but it should be like I am teaching you personally and we are learning from the ICSI study material. So that is why I am just presuming that you don't know what is buyback. So now there could be some things which I tell you which you already know, but this will also help you to clarify the concept. Buy versus buyback. What is buying and what is buyback? So the first thing is what is buying shares. So buy means buying shares and securities also, because shares is just one type of security. Correct? As you know, shares, scrips, bonds, deposit, there are different kinds. Convertible notes. Correct? There are so many kinds of securities. So how do we buy securities? So here what happens, basically in buying, the subscriber or shareholder or debenture holder, whoever you want to call, this is the person who is buying. They will give money, correct, to the company, the subscriber. So let us say yourself. So one example I'm just taking, Deepa. Deepa is the name of a person. So Deepa is giving money to the company and company will give the shares to her, as you can see here, or securities. Shares I am telling because it is the most popular and so that you'll understand. This is buying, but now we are studying about buyback. So of course in Companies Act we have section 68 in detail about buyback, but in securities laws, yes, you should know the Companies Act 2013 and the provisions relating to buyback, but we study mainly the SEBI regulations relating to buyback for listed companies. So in simple, what is buyback? The company offers to take back the shares or securities. When I say shares, it includes securities. That is what you should know. So what does it do? Company will offer. It is not compulsory, correct? You don't have to take it back. So company offers to take back the shares. So what the company will do? Company will give money. Where will they have the money? We'll study all that. Securities premium account, then free reserves, correct? They should have the money. See, to buy anything you need money. So company wants to buy back the shares. They will give it to the shareholder or the security holder. Yes. They will give back the money. So they will give back the money. They'll give money and that time the shareholder has to give to the company his securities or shares which he has. Correct? Very simple. In buying, what happens? The shareholder gives money to company. Company will give the shareholder the shares or different securities. Ulta. Buyback is exactly ulta. So the company will tell, we want back our shares. We have given you shares over here, correct? We want it back. And we don't want to take it for free. We'll give you money. Give it back to us. And they give the money to shareholder. And the shareholder give back the security or the shares to the company. So for shareholder or the security holder, it is an exit strategy. Point number 1. Second one, it's a great return on investment. Correct? I might have bought the shares for 10,000 rupees. Company is ready to buy back for 40,000 rupees. So that is my 30,000 rupees profit I am getting. Correct? That is also possible. Then from company side, you'll think why company? See, many times company want to consolidate holding. They want to take different decisions. They want to change their line of business. So let us say companies, let's say simple private company. They have 80 shareholders. They want to consolidate. They want to have only 5 shareholders. But please remember, it is an offer. Just because company says we'll buy back your shares, you don't have to give it back. No, not at all. You don't have to. Company will offer. So even if company wants you out of the system and they don't want you to be shareholder, you have to give your consent. Without consent, no buyback is valid. This is the first thing you have to understand. But you only tell me if company gives you very good offer. So this is Deepa. So Deepa bought the shares for 10,000. Company is telling, now I'll give you 50,000. Give back my shares. Deepa will think, yeah, good. I'm getting only dividend 500 rupees, 800 rupees. Many years the company is not even declaring dividend. And I cannot even ask dividend. I can't even demand dividend. Let me give it back. Correct? That is possible. So that is the brief introduction on the lesson 7 buyback of securities regulations 2018. So here we need to look at the SEBI buyback of securities regulations 2018. I already have given you the brief of what is buying shares, what is buyback of shares. So I say shares because that is the most popular, but the technical word we should use is securities, as you all know. Section 2H of the Securities Contract Regulation Act. Yeah. So here what all we study in this, why we should do buyback, applicability, what are the definitions, conditions, methods, how do we do the buyback, correct? Sources, from where do we get the money to do the buyback? Prohibition for buyback, when we cannot do the buyback. Authorization, okay, that is where do we get the authority for the buyback or the permission for buyback. Explanatory statement which goes along with the notice, what all items we have to disclose over here. It's very interesting. Additional disclosure, buyback from existing shareholders, that is how do we do that? Through tender offer. Buyback from open market, how do we do? Obligations for buyback of shares or other securities, what all we have to do, what are the mandatory provisions, correct? These things are very, very interesting, and when we study now, tomorrow when we work as a CS, our concepts will be clear. And what is buyback compliance under the SEBI SAST regulations? So all this we are going to be studying. So as I told, I already explained all this to you. Now let us go as per the study material in detail. Okay. So as you can see here in the introduction, what are they saying? The corporates adopt various tools, that is mergers, amalgamation, takeover, for restructuring the business. So when we say restructure, end of the day, we want to grow, correct? To grow the business basically. So we can say growing the business with the reasons when we go for restructuring. Yes. So all these activities, whatever we do restructuring, they will definitely impact the share prices. That is the value of each shares which the company has. As the shares of companies are held by different segments of society, anyone can be shareholder, correct? This is the basic concept. Entrepreneurs, institutional investors, individual shareholders, that is small investors, anyone. So equality is there and opportunity is there to all shareholders. And everybody has transparency, proper disclosure will be there. That is for small and minority shareholders also. This is the basic thing you have to know. So everybody is equal when we talk about shareholder. Buyback of securities is a corporate financial strategy which involves repurchase of its outstanding shares by the company. Companies generally buy back shares in order to reorganize the capital structure, return cash to the shareholders, and enhance the overall shareholders' value. So buyback leads to reduction in outstanding number of equity shares. So overall outstanding number of equity shares will reduce, which may lead to improvement in earnings per share and enhance return on the net worth and create long-term value for continuing shareholders. See, when we say buyback also, you don't have to exit fully. You have 100 shares. Company is buying back. Okay, you give only 40 shares. You still continue to be a shareholder with 60 shares, correct? So you are also getting return on investment for 40, plus you are continuing to be shareholder where you are getting long term value for the continuing shareholder. So overall it is good for company and the shareholder. Of course, shareholder can say I have 100, I want to give all the 100, I want to completely exit. That is also possible. Both are possible. Depending on what they want to do, you can structure the whole deal. Buyback of securities is not permitted as a treasury option under which the securities may be reissued later. Okay? Company can resort to buyback to reduce the number of shares issued and return the surplus cash to the shareholders. See, in India as of now, treasury option is not there, so you cannot reissue the same shares later. You can go for fresh issue after a certain time limit, but there it is not considered as reissuing the same shares. It is considered as a fresh issue. Now we come to objective of notifying the SEBI buyback regulations 2018. Means why did we have these regulations? To simplify the language of the buyback regulations 1998, removing some old provisions and some things which were inconsistent. So it was very much required in 2018 to get the latest concepts of buyback into the law. Yes, to make sure Companies Act 2013 is followed and stuff like that. Yeah. Considering that a significant number of provisions as outlined under 68 and 70 of the Companies Act were proposed to be incorporated in buyback regulations to make it self-contained and more comprehensive. So because we have section 68 buyback and section 70, we need to have a robust buyback regulations. It was not happening. So these new regulations of 2018 will make the buyback regulations for listed companies which is self-contained and more comprehensive. It is better right now. So they reframe the entire new set of buyback, they thought. Existing provisions have been restructured and resequenced. Sequence has changed for better flow in the buyback regulations. So now, as a company secretary, when you want to comply with this or any of the company wants to do buyback, this rules is more friendly and easy to follow. This is what we should know. Even in your book, wherever required, no, see there is space over here. Please use this space. Write all the points which I am telling you. That way you will also concentrate. Otherwise, usually online classes, many students tell, sir, we are not getting concentration. This is how you get concentration, right? And you can pause, you can rewind, you can watch multiple times. I wish I had online classes when I was there anyway. And I'm doing every single sentence. So SEBI in the board meeting on 28 March approved the proposal. So they may approve the proposal and they said let us go for the buyback regulations. So finally September 11th 2018, after all the process like public consultation, there are so many process, right? You can't, SEBI simply can't make some law and say this is the final, all of you follow. No. There is a process. They notified the changes and now we finally have the SEBI buyback of regulations 2018. What are the objectives of buyback? As you know, it's a process where company purchases its own shares or other specified securities from the holders. As I told you, I drew this entire diagram. So what they're telling, same thing here. So shareholder is having the shares. Now company will buy it, buy back by company. So here what you need to understand is shareholder may have 1000 shares. Shareholder can give entire 1000 shares. He can give 500 shares, 600 shares, 700 shares, 5 shares, whatever. Also company can give offer only for 300. See, we want to buy back 300 shares only. We don't want to buy back entire 1000. That is also there. Of course, we'll study all those details right now. Yeah, when we look at the objectives of the buyback, here we have some points which we have given, which is quite straightforward. To improve the EPS, that is earnings per share of the company. This will be a direct impact when we do buyback. So obviously, right, when the buyback is done, the earnings per share will improve. That's a basic principle. To improve return on capital, return on net worth, and enhance the long-term shareholder value. So for the long-term shareholder value, we do this. Enhance the consolidation of stake in the company. As I told you, there may be 100 shareholders, you want to make it only 15 shareholders. You're consolidating the company. To prevent unwelcome takeover bids. That is, if there is some kind of a hostile takeover, somebody else is trying to take over the company, we can avoid it by buyback. To return surplus cash to the shareholders. So we can give back the surplus cash which is there in the securities premium account or in the free reserves. If company does not want cash, they don't want to expand, they don't need cash, they can give it to the owners of the company. End of the day, don't forget the basic principles. Shareholders or owners. So when we have enough money, we don't want to expand, we don't want to reinvest, we can have the concept of returning the surplus cash to the shareholders. Optimum capital structure. To have a proper capital structure where we have a balance so that company will be strong in the future. To support share price during periods of sluggish market condition. If the market is very down, you can go for buyback. To service the equity more efficient. Okay, to make sure that the equity is more efficient, they can use it however they want. To provide an additional exit route, as I told you in the beginning itself, exit route or what we call return of investment for the shareholders. Okay, that is when shares are not traded properly, we can go for buyback. And this one, remember, we are studying in the angle of securities law. So in a private company it's different, but in security laws it is all about listed companies, right? Yeah, now we go to the company law. So company law talks about section 68 where buyback is there and rule 17 of the share capital and debenture rules. So listed companies have to comply with the regulations laid down by SEBI also. So if you're a listed company, if you want to do buyback, what should you do? First one, you have to follow section 68. Second one, you have to follow rule number 17. This every company has to do. Third one, this is what your listed company have to do. SEBI regulations 2018. What we are studying now, you have to follow. See, in exam, any question is relating to this, you can even start writing the answer like this. Answer to question number 4B. Simply I'm giving some example. Don't tell, sir, how do you know 4B? No, I don't know. I'm just guessing. So, applicable law relating to buyback. You write like this heading. Then you write, just to write these 3 points. Section 68, Rule 17 and SEBI regulations. So the person who is correcting the paper, they'll know, okay, this student knows the overall concept, correct? The applicable law is these 3 things we have to read. So it should always read with. When we say RW, that means read with. So if a listed company wants to do section 68, read with rule 17, that is share capital debenture rules and SEBI regulations 2018. Only when they do all of this, they can go for the buyback. So what are the conditions? Section 68 subsection 2. Securities offered for buyback must be fully paid up. So if it is a 10 rupees share, not 8 rupees, not 7 rupees, entire 10 rupees should be paid up. Buyback must be authorized by the article. This is a general point, correct? Most of the things have to be authorized by the AOA of the company. That is also straightforward. There must be gap of at least 1 year between 2 buyback. That means if you did buyback this year, at least 1 year should be over if you want to do second buyback. Otherwise you can't keep doing. Otherwise every month company will tell every month we want to do buyback. No. Section 68 says no. If you want to do buyback, you can do it anytime, but if you want to do again, 1 year gap should be there. See here. Buyback must be authorized by special resolution. That is 75% of shareholders present and voting. If it is 10% or less buyback, then board resolution is enough. That means overall buyback we are doing, let us say 1 crore is the capital. We want to buy back only 10 lakhs. We can do by board resolution, as you can see here. Correct? But 1 crore is there. I want to buy back 25%. Correct? That is 25 lakhs. Then I need special resolution. That is 75% voting. Okay? Yeah. It's not required to pass special resolution if it is only up to 10% or less. Company can buy back 25% of the aggregate paid up capital and free reserves of the company. However, in case of buyback of equity shares, the limit 25% shall be construed as 25% of equity paid up capital. So please remember, the logic is simple. Board of directors can buy back up to 10% of paid up capital plus free reserves of the company, and the shareholders, that what we call a special resolution, that is shareholders can buy back 25% of the paid up capital, yes, plus free reserves of the company. What is special resolution? 75% voting. Correct? 75% people should vote. Who should vote? In the AGM or EGM, that is members meeting. But if we can't wait so much, we can simply, very easy, board of directors level itself, we can vote for it. Yes? The concept is pretty straightforward. Company shall complete buyback within a period of 1 year from date of the resolution. So suppose resolution is passed, let us say July 2020. By July 2021, you must complete. Otherwise, this resolution, what we have, will have no validity. So within 1 year of resolution, you should complete. So if you have any doubts, please do get in touch with us. As you know very well, we have the WhatsApp dedicated group for you guys. You can get in touch there. I'll be more than happy to help you. Applicability. So SEBI buyback regulation shall apply to buyback of shares, okay, with the provisions of Companies Act 2013. So that is what this regulations is all about. We'll come to the important definitions. Important definitions, we first go to associate. Associate means when we are doing buyback, we should know these terms. Correct? It includes a person, so it's an inclusive definition, who directly or indirectly by himself or in combination with relatives control the company. So whoever controls the company, we call them associate. Or whose employee, officer, director is also part of the company. Now, next important definition is buyback period. What is it? It is the period between date of the board of directors resolution. So let us say the date of board of directors resolution is 20th February. Okay. Date of declaration of results of the postal ballot special resolution. So let us say that is 15th March. As the case may be, to authorize the buyback. Yes. And the date which the payment of consideration to shareholders who have accepted the buyback offer is made. So this period, whatever is there, we call it as a buyback period. Within that, the buyback should happen. Okay. Within this time, buyback should happen. Okay. Please understand. Control. It has the same meaning as of the SEBI substantial acquisition takeovers rules, control. So we don't have to worry right now. Whatever is in SAST, same thing applies here. Small shareholder. So small shareholder, we need to understand, who holds shares or other securities on the basis of closing price of shares on the recognized stock exchange in which highest trading volume in such securities as on record date is not more than 2 lakh rupees. So if it is not more than 2 lakh rupees, we call it as a small shareholder. Anybody who is holding not more than 2 lakhs rupees. Specified securities. It includes the employee stock option or other securities as notified by the central government from time to time. That is specified securities if there is any. Yes. So what is that? If central government will notify, they should give some notice that so and so securities are specified securities. We should know that. Tender offer. Offer by a company to buy back its own shares or other specified securities through letter of offer from the holders of the shares or other specified securities of the company. That is tender offer. Conditions for buyback of shares or other securities. What is the condition? This already I told you. Maximum we can buy back is 25% of the paid up capital and free reserves of the company. The ratio of the aggregate of secured and unsecured debts owed by the company after buyback shall not be more than twice the paid up capital and free reserves. So it will not be more than twice the paid up capital and free reserves. That is the ratio of this aggregate secured and unsecured debts. Whatever, let's say secured debts is 10 lakhs, unsecured debt is 20 lakhs. Ratio of the aggregate secured and unsecured debt owed by the company after buyback shall not be more than twice the paid up share capital and free reserves. So this is 30 lakhs. Let's say paid up capital and free reserves is, let us say, 15 lakhs. Paid up capital plus free reserves is 15 lakhs. Ratio of the aggregate secured and unsecured debts, how much is it? 30 lakhs. Shall not be more than twice of the paid up share capital and free reserve. It should not be more than 2 times. So it is exactly 2 times in my example. 15 into 2, 30 lakhs. So this is okay. If our secured and unsecured debts is more than paid up share capital and free reserves, then it is not allowed. This is a condition for buyback. All shares and securities shall be fully paid up. This is important. This we knew, correct? So there are 3 points. First point is easy. 25% of the paid up share capital and free reserves is what you can buy back. Correct. Second point, what they're saying, after you do buyback, the ratio of the debts. When I say debts, secured and unsecured debts. Correct. See here. Secured and unsecured debts owed by the company after buyback shall not be more than twice the paid up share capital and free reserves. Such things, no. Please write example. Example you write. What you'll write? Secured debt is 10 lakhs. Unsecured debt is 20 lakhs. So total is 30 lakhs. Paid up share capital is 10 lakhs. Free reserves is 5 lakhs. Some example. So this secured debt and unsecured debt should not be more than 2 times. So in this it's exactly 2 times, so it is allowed. What is this? After the buyback. Okay? Yes.